The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the Wednesday edition, July the 10th. No, July the 11th. And my pleasure to be here. And of course, right at TFNN, that's when you can get your full day, a smorgasbord of technical analysis running right through the day. Just great programming. I just try as much as possible, even though I'm doing tons of work in between. I absolutely try my best to listen to the shows. Some of the new shows are even just, you don't expect that. Really fabulous work. So congratulations to Tom O'Brien and the whole crew for setting this up, and for our welcome to the new hosts. We have a full lineup right here, starting 9 o'clock with Steve Rhodes. On a Wednesday, we then go to Tom and Steve together. Then you get me. Then you get Larry Pesavento, the potential author of a new book. No, the author of a potential new book. No, the author of a new book that's coming up, I believe. I heard him say. We're really looking forward to that. You know, the work that goes into a book. I remember when I did my CD introducing the ChapmanWave methodology. First of all, you have to sort through in your mind all the stuff that you just do automatically, that you just do. For instance, I've been working on something for a little while now, quite a while, of having two different trading accounts. One with where I use very specific parameters, stops and buy stops, and then another one which I really don't want to say that it's based on emotion, because it's really not based on emotion, but it's based on an instant analysis of a larger trend. And it's just fascinating to me that actually that one is doing very well. I thought I'd just blow up on that one, but it's really interesting. So at the same time, when you're producing something that really forces you to do almost like a psychoanalysis of your thought process. Call me a psychoanalysis. It's an analysis, a very deep analysis of your thought process in producing a particular way of dealing with a particular pattern or some specific criteria. And sometimes you do it automatically. Then when you have to actually teach it or you have to write about it, you start thinking, you say, wow, no, it isn't that. I thought it was that, but somehow I just do it. Well, that's a fabulous process. And I always say, when you teach, you actually learn at the same time. So it's a great thing to be a teacher, because it forces you to articulate very clearly what is going on. So articulating very clearly what's going on, I can tell you specifically that the Dow right now is down 27 at 12,625. The S&P is down, it's now unchanged at 1341. And I just lost all my information, so let me just run to this. You'll see a chart here, a very long-term chart of Walmart. I had spent some time on it last, and out of the blue I suddenly see it being discussed. I didn't hear it, I just saw it being discussed this morning by Tom and Steve. Comp index is down 11 at 28.90. The gold is, the GLD is up 83 cents at 152.97. Gold is up about $9 or $10 at 15.89. Silver is up 12 cents at 3.4. Oh no, silver is up 13 cents at 27. High grade copper is trying to rally to 3.41, up a tad, up 0.01. Now, this is very interesting. You've got bonds down 5/30 seconds at 150 and 27/30 seconds on the continuous contract. But at the same time, crude oil is up 90 cents at 84.80. I'm going to be as specific as I can, certainly about today. What I'm looking at here is that there's been a failure pattern in my 120-minute chart. And the only reason is that by 2 points, we went underneath the previous low of 12,543 on the 26th of June. Those 2 points negate a new buy signal. Once in a while, if it's exactly the same price, I will automatically include it, and I will go A, B, C, D, E, or whatever it is. But if it undercuts it, my rule of thumb is it's a brand new start. Now, that means I've got a dichotomy. Why? Because in the diamonds, there was another pattern. So, and that happened in a couple of the charts. They undercut the previous low. Some didn't on that rally, starting on the, what was it? What did I say it was? On the 26th of June. So, okay. So this is what I'm looking at. The 120-minute chart says that 12,733, that whole area, 10 points below, 10 points above, that's going to be really strong resistance because it became support and bam, it's become a resistance. So let's clear that up. Also, the candle that was formed, the long-legged doji on the 10th at 11:30, that must have been yesterday, says that the body of the candle, which is also around about 12,733, might have to be retested, or at least the wick, and that wick low is 12,829. At the bottom here, in this left-hand corner, this is what I show my subscribers every single day. It takes a lot of time to get all this done. We've had a completed peak A, B, C, D, E. Now that, in the 120-minute VIX chart, and the VIX is at 18.40, down 32, and yet the market's down 30 points in the Dow and half a point in the S&P. Such a quick peak A, B, C, D, E, D, certainly to D and then to E, in my CD introducing the ChapmanWave methodology, announces quite clearly that at D or E, you will get a pretty sharp pullback, but it's not the end of the world. It isn't as if you run up very quickly, therefore you have to drop very sharply. It just says be real careful because you can pull back into the middle of that trading area very quickly. And then there's a chance that it can go even higher. Well, more important to me is the fact that I've drawn this down. It looks like a down channel, but it isn't. It's an inside track. It's the ChapmanWave inside track, which says if you break above the green line, which would be resistance based on that red line, if you're looking at Tiger TV, if it decisively breaks above it and then doesn't go back into it within 2 to 3 bars, and now it's done it within 3 bars, within 3 bars, that would be very positive. So we're going to watch to see by the end of the day, will the volatility index, which is under 20, this is 18.43, does it slide to 1820s or lower, which will help the Dow move higher? Or is it going to suddenly have another burst of energy and close at about 18.91, somewhere around there? Not a new recovery high, but intraday high, but around about there, as the market just meanders and closes down slightly. Well, this is going to be very interesting. Why? Because if we look at this right corner out of these 5 charts, if we look at the right corner, then what we're looking at is, I need to just get rid of something right there. Then we're looking at the short-term trading index. Now I have something that I've developed. It's based on Richard Arm's Trin Index, short-term trading index. Fabulous work he did on this index. I call it fabulous work because I use it in a specific way. Not at all what I've ever seen him use. It's just completely different. Same way as I use the stochastic and the MACD, etc. I use it in a completely different way, a way that found itself into my mind. I didn't go looking for it. It just made itself apparent and I picked it up. I use certain parameters to say that if the Trin is low, there's certain numbers that I look at, that Trin is telling me that within 1 day, that is if today the Trin had to drop very sharply, I would say sometime early tomorrow morning, early means until about 10:30 or 11 in the morning, or even earlier than that, even if the futures were very sharply higher, very sharply lower, at some point there's going to be a very strong rally. And no, even if the futures were higher, there will be a pullback. And then later there will be a rally attempt. So it says, if you're in a position and you recognize this particular indicator and you're looking to add, you'll have a great chance the next morning. Don't do it that day. Wait until the next morning. It's a fabulous indicator. It's got a way above 90% accuracy rate. It also says, a new one that I developed from the same technique, is that if it goes over a certain level, you can expect that regardless of where the futures are, at some point they will be within 1 to 2 days. It's not the next day. It's within 1 to 2 days. There will be a burst of energy. And all it says is a burst of energy. It doesn't say it's going to be a massively higher close. But that information gives you something for the next day to be able to base some of your analysis on what you're going to do. Well, I've got a cluster pattern. I'm going to pull this back. I don't think I've had a cluster pattern at the top. I've had it at the bottom. I haven't had a cluster pattern since April. I'm going to circle it in here. And that cluster pattern at the highs, what did it produce? It produced a sudden turnaround that gave the dreaded H pattern. So it was a turnaround, the market went up, and then on the final burst of energy, the market came down, retested the 1357s in the S&P, and then what happened was it started to run to the upside even more seriously. So I'm watching this really closely because we've got some very similar pattern here. If it doesn't work, in other words, if there isn't the burst of energy in the next 2 days, taking the Dow to the 12,720 to 12,780 area, or the S&P to the 1358, maybe 1361 area, it is saying to me, loud and clear, that at this particular point, rallies are going to fail regardless of what the technical indicators are showing. So I've got this very, very nicely formulated here. The volatility index, if this is not going to work and there is no rally, and there could be a rally at any point starting right now, because the volatility index is, the VIX is at 18.48, way below 20%, the 20 level. That says, be ready for some kind of a rally. It then says, whoa, if the market isn't able to take that kind of internal, digest that kind of internal strength, use it to its advantage, and rally 120 to 150 points in the Dow, 10 to 12 points in the S&P, be careful on the downside. Enough with that. Also wanted to show what my subscribers get every single day. This is the Dow chart. Look where we are. We've gone to 12,594. Broke the 12,606 level from yesterday, sitting right on this dashed line up channel support. I haven't made it a thick line because there are so many others. There's the 200 period exponential moving average at 12,509. If it starts to fail, and if in the next 2 days the Dow takes at 12,450, believe me, that trend is going to, the volatility index is going to 20 and above. That's going to be very negative. So I want you to go through some of those things. I've got a ton to talk about. I also want to take your calls at 877-927-6648. I've got this chart of Walmart here. I'm done with Walmart. You always get some stocks in the defensive area. This is in it that are doing. I want to go to the euro. I want to start talking about July. What can happen in July? We do have negative positions in my
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the #1 reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. Just like that, another month has passed, and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. Thanks so much, and good trading.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Love to take your calls. Now, I'm showing here the ESU12. For me, that's the way you can get the E-mini S&P 500 September 2012 futures contract. This 120-minute chart, and I show this every year. We have some point in the year where I've been able to say, hey, there's something I call the empty space. It means that the 120-minute chart has had a spectacular move to the upside, had an upside congestion consolidation. Okay, in this case, from 1349.50 to the 1370s, 1375 area, and held that, and then all of a sudden that congestion area became a very strong repellent, and it also became kind of an indication of where the resistance would be, and that'll be around about the 1352s. Well, we've come down to trough D, and that trough D is at 1330.50. Now we're having one of the smallest little rallies. The E-minis are having the smallest rallies in price, longest in time, but smallest in price. And unless the E-minis can take out decisively, 1342.50, when I say decisively, I mean a beautiful green candle that goes to the top of the ugly red candle of the 10th of July at 2:30 in the afternoon with a high of 1346.50. Now, it's really important that it does that. And it does it soon, because there are three competing chart formations here. And the three competing chart formations are that it can make the pattern that I call it's an inverse falling axe. In other words, it's got a rising bottom trend line and a sharper rising trend line to the upside. Needs to break decisively over 1343 to take that out. Or, and that'll be very positive, or there's what I can also consider it as an uptrend line that should have a very strong inside track, and that inside track says it needs to break away even on the short term and close above the 9 EMA, above 1337, because if it closes underneath 1333, the low of today, then immediately you've got to expect that it's going to test 1330.50. That's the left side low of 415 yesterday at the close. Now, if it does that, then all of a sudden this empty space, because if the S&P futures at any point go to the 1327 to the 1325 level, I just have no choice but to expect, because there's no support until the little trough at 1316 at 8:30 in the evening. I think it was the evening, maybe the morning of the 28th of June. No, that was the morning. Until between then and 1306.75. So this is a very critical way. So there's the falling axe, which says if you break down under the left side, underneath the trend line, you're going to test the left side low and probably take it out. There's also the inside track support. Then there's the steeper rising up trend line. But here comes the real crux of the matter, because you can see it's been permeating this chart all the time. And that is the dreaded H. So if it closes below the 30.50 level, it says, depending how deep that is, if it's not too deep, it should try to come back, retest, say, hi guys, I'm just coming to say goodbye. And then it goes down again below that level. But the technicals right now are not very strong at all. So that's the 120-minute chart. But wait a minute. There are a lot of other things that we need to look at. I wanted to show a chart of corn, C-O-R-N. This is the ETF that you can use to trade corn. And, of course, it's a terrible thing to trade, because you are highly vulnerable to overnight trading because you can't get out of it. Maybe you can. I've not checked that, but maybe overnight you can trade this. Maybe some brokerage houses allow you to do that. I'm not sure. But you are kind of vulnerable. I've only got the chart pattern from 9:30 in the morning till 4 in the afternoon. This is leg E. It went, remember I said in the ChapmanWave with the MACD and stochastic so strong, when it went to that strong leg B at 42.91 on the 27th, pulled back very slightly. I said if it breaks out above that level, it'll start leg C, and then we should get at least a D. Well, what we're looking at here is that the doji on the 9th pulled back to another doji yesterday. It climbed to a slightly higher high, and now it's pulling back. The MACD is still strong. Stochastic is still strong. So I have to go to the 120-minute chart on this Toikrium corn fund. Now, I don't know if there's something wrong with the 120-minute chart, because it still hasn't given me the red bar.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, and thank you to the Den. What a wonderful medium we have here, folks. This Den, I mentioned one little thing here, and I got so many great responses. It's really terrific. Yeah, there's only specific trading between 10:30 and 3 p.m., and that's when it's liquid, the corn contract. So what I did is I quickly went to the CZ12, and of course, I'm only doing this as a chart formation in the ChapmanWave. I'm not trading this, although we almost put on a trade on the CORN. Just decided I didn't know enough about it. And of course, this is Larry Pesavente's purview, absolute expert at all the commodities and how to trade them. I'm doing this purely as a chart formation. And what I wanted to say is this, that if, in my work at least, if anyone is still in corn, long on the corn side, that sounds a little corny, long on the corn side. If you're still long your corn contracts, then I would recommend taking something off right now. I'm not sure that this is going to be an instant restart. I would have to say that this is leg F up in the daily. It is leg D up in the 120-minute chart. It is a single leg A up in the monthly, but in the weekly it's A, B, but it has all the characteristics of a single leg up, and that says unless it has a very high level consolidation, I know all about the drought and everything, but this is just a chart I'm looking at. Some profit should be taken. I would take something off. I would not short it. No way, no way. The MACD and stochastic are still really strong. 93%, and the MACD is still strong. But CZ12, the contract, that's December, I'm saying my thinking is right now I would be taking a little bit off. What was the high? Round number high? Well, they often have round numbers. 748 high, 713 low. It's trading at 724 and 2/8. 6/8. No eighths. Wow, it moves quickly. So there it is. Anyway, that's what I wanted to do, and I wanted to just discuss that in terms of the ChapmanWave, because I've been following this for a while. So now let's go to other things that I want to look at. I had a question. Let me just think now. The two things that happened. One is I saw Tom and Steve. I just saw the chart of. I recognized the chart immediately. I was busy and I had to sound off because I had to do other things. I immediately recognized it, and it was the Walmart chart, WMT, and I'd actually coincidentally spent quite some time on it day before yesterday and last night. Actually, no, for a few days, because it was starting to look like it was going to break out. I'm calling this leg F up in the monthly chart, and it's had, now the reason why I went to it is that I have a whole section in, I don't know how to explain this. I've got titles here. There must be 760 or something titles: double tops, drop bucket, Groucho Marx eyebrows, the dreaded H, rectangles, repeated carrots, round numbers, silent round numbers. The number of stocks that are giving me signals in their daily charts, even weekly actually, with round numbers, or either at the high, at the close, or at the open, or at the low, or within the day before, the day after, or a candle formation that says to me, be careful. It's just, I haven't seen that number for a very long time. Roman candle, repeated, peaks when F recycles, etc. Well, the rectangle formation, I wrote it in last night. This is the longest rectangle I've ever seen. You know, we talk about the longest up channel that I've ever seen. That's the bonds. The 30-year T-bond has a 24-year, I think I said 24-year up channel. Well, this is the longest rectangle that I've seen, between $70.25 back in December 1999. But really, we'd have to take it from about 65. 65 was really the trading range, between 65 and 42. And it did that over, you remember I always say rectangles can last a lot longer than your patience. Try 12 years. And it's just broken out. 2 days ago, I think it was, it broke out from that. Very strong chart. I'm getting a signal in the daily that says, yeah, be careful, could pull back. Weekly is still pretty darn strong. So that's what I wanted to talk about. Now, I had a question here about, can I hear the cue music? I certainly can. Did I just talk right through a break? I didn't think I did. All right. Well, so here we are. We've got IYT, I think, is very important in this particular instance. Why? Because crude oil has been pulling back. And I have to tell you, that crude oil chart doesn't look good. Well, you would expect that the IYT, that's the iShares U.S. Transportation ETF, would be close to, breaking out from the major previous high. In this case, it was peak 8, 96.13 in the monthly. It hasn't been able to do that. And yet you have had some, if you look at the airline index, XAL.X, oh no, do they have the X now? XAL, if you look at the airline index, it's running very nicely. This is leg D up in the daily. So what's so fascinating about this particular market, bifurcated market, it is a market where if you are in the right stock, meaning if you are long and it's working for you, it seems to work almost regardless of what's going on in the general market. If you are short and it's working for you, that particular trend seems to be working regardless of what goes on in the market. And I think that's the way you have to do it. You have to have a mental picture in your mind that says the tide is going down in this sector or this stock. I feel comfortable about shorting it. The tide is going up in the sector or this stock. I feel comfortable, and the stops or the buy stops are going to tell you the truth of whether you're right or you're wrong. So the XAL still running nicely, but I don't get confirmation in the stochastic. MACD, yes. Stochastic still way under the 80% level at 72.5. So I'm going to be watching this really closely. So I believe we're going to go to a break in another moment. I do want to take calls. 877-927-6648. I wanted to look at a little closer look at bonds. We did that the other day, but I want to go over that again. And I wanted to look at crude oil. So just before we go to break, if the break is coming up, which I think it is, I wanted to go to I wanted to just quickly look at high-grade copper, because I've been talking about this for some time. If high-grade copper is not going to participate, I've got the U contract, that's the September contract, and it made a peak D just recently in the daily, a failed peak C, really like a C1, C2 failure. If copper breaks under $3.25 on a weekly basis, that is on Friday at 4 o'clock, if it closes underneath $3.29, let's call it 3.28 to make it decisive. It says very quickly that it could come down and retest the $3.09 level that was made October of last year. And one of the things that I think is really important is that when you're looking at the very long term, I hope I haven't lost this chart. No, there it is. The very long-term chart of high-grade copper, the monthly, there is a pattern forming that says this entire range between $4.67 and I would like to say 3, but I'm going to make it the low of June of 2010, 2.86. If that level is taken out, then the MACD and the stochastic are at this particular point, especially now, this is where I use volume. The volume in the monthly charts, because these are long-term charts, so this is a really huge volume. The volume is increasing as the high-grade copper is underneath the 9-period exponential moving average. I consider that a negative. And if copper does break $3, then 2.5 to 2.4 would be the 200-period moving average, where it hit last time. In fact, it came off the 200 SMA, simple moving average, at 1.324 back in December of 2008. So when you put that together with the outlook I have for gold, that says the peak F top in the ChapmanWave, very important, will start to show a deeper decline the moment that gold, this continuous contract, breaks under 1540. Is that correct? No, it has to be 1537. If gold on any month, July or August, starts to break under 1525, I think it's going to be a real quick run to the downside. And as I said in my GLD, the GLD would be targeting, if it broke under 147, it's at 152.91 right now. If it will be targeting a very quick slide towards the 142, 139 level. Wow. Now, what does that say about the dollar? The DXY. The DXY is, at this particular point, the dollar index is acting very well. This is leg D up. 83.54, 83.59. We need 5 more cents, a higher high of 5 more cents to break above last month's peak for the dollar not to make a peak D in July. And at this particular point, if you're looking at the EUR, USD, I would say, based on that monthly chart, that looks just terrible. It's forming this M formation, soft M formation, this dreaded H that takes on an M pattern, and that says that at some point the euro should crack 1.8756, try to have a rally back towards the 1.34 area, 1.35, and then come down even deeper. So this is a very, very critical level, because the euro has to break above 1.3 in the next 2 to 3 weeks to really start to improve that monthly chart, which is not looking very good. So we've covered a chunk of ground. And let's see, I had a question in the den earlier on, then I overlooked it by mistake, didn't mean to. And that the question was, XLF. Someone had asked me about, I think it was in the den, the XLF. Now this is kind of important for me. The XLF had a really nice rally, and it took that's the S&P Select Financial Spider Fund. And at this particular point, the low of 13.30 from the June low ran up to a peak D 4 peaks higher. Remember, that's the requisite of the ChapmanWave is that any buy mode should take you at least to a peak D if the technicals are still confirming as it breaks C, which it did. So it went all the way to 1485, then it pulled back, and what did it do? The resistance that became support is now being tested once again, and that's the 200-period exponential moving average at 14.38. Hey, the MACD has not yet crossed negative. So stochastic looks very poor. The on-balance volume, that's the green. Now, this is the one that I use the most, on-balance volume. Remember, you've got other experts here who use volume in a completely different way. And a legitimate way is the way that works. So that, to me, is very important. And let's see. Let me just get rid of that. Thank you. Now, the XLF says that if it starts to take out $14.28 at 14.42, if the XLF daily takes out $14, then immediately 13.99, which is the simple moving average, the 200-period simple moving average, if that is tested and broken in the next 2 weeks, you've got to be careful. Why? Because the weekly chart says there's a pattern that I call the falling axe. It's just like a declining ice cream cone. Well, if you think of those, the cone-shaped cone, not the flat ones. Well, this has a pattern. This is one of those fighting the two patterns. It needs to break out decisively and go to 15.07, 15.15 in the next week or so. I'd say, let's say 7 sessions. It needs to get there. If it does, that's very positive because it says you've broken resistance. Not only have you broken resistance, but there's a good chance that if it does happen, then the fast-moving average of the MACD, that yellow line, this is the middle chart, which is the weekly chart. Let me make it a little bit bigger. That's going to improve. Not only that, if it improves, the stochastic should rally. Now it's only at 44% and the MACD is very weak. I have to tell you, I'm a little concerned about some of these things here. But then there's another pattern, which is the cup and ladle. One of my least favorite patterns, but believe me, if it works, it works. And that would say that if the XLF can get to the 15.15, 15.20 area, wow, then suddenly you've got the right side handle, not a traditional one, but let's call it a handle for now, could start to work. And then all of a sudden, the monthly chart, which has a very strong MACD, but a very weak stochastic, could start to improve. So all of this is contingent upon a number of factors, but I'm going to make it one. It's our 3 bears. VIXI, the volatility index, right there, which is actually... the Dow should not be down 24, it should be up 53, 57 at this particular point with the volatility index down 32 at 1840. It could still do that, and I'm suspecting that we've got some internal strength here that by day's end, the bears could just be tired of fighting it and we might get a little bit of a relief rally. But in the meantime, that's my criteria, that if the volatility index goes above 20 at any point, this market is coming down. It's going to be holding down as long as it's over 20. If the volatility index pulls back and takes out the low of yesterday, 1627, this market is going to go much higher. So I'm making it as simple as that, but I'm finding more and more charts that are extremely weak. So we've got a break coming up before the final section. I think I pretty much covered what I want to cover here. The TLT is making leg D. It's making it a weekly. This is good action. Let me just quickly, we've got a break coming up. Yeah, this might be peak C. All right, I'll do a little bit more on the TLT because it's running quite nicely, and I'll be back and we take your calls as well.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, everyone. I had a couple of questions, actually, during the break. I'll answer them. Number one, I was quickly doing a 10-minute chart because Larry was kind enough to show a 10-minute chart in the den. I believe that's a 10. Oh, it's a 2-minute chart. I wonder why it looked different to mine. I thought it was a 10. A 2-minute chart of corn. I've got the CZ 12 right now up, and you'll see that it's done in the ChapmanWave. It made based on the fast-moving average, it went to peak ABCD, but then it held the 9-period moving average. It also held the fast-moving average, so it went all the way to a G and then gave the sell signal. Then it had a single leg A up, pulled back. Then within it had another little mini A, and then it went B, C, D, peak D to the top, and then it pulled back. And then it had that spiral starting from, I think it was 718.68. So it goes to peak A, B, C, and then D, and it makes a top of 748 and then comes plummeting down. But there's also a left side, right side price time match. So these are techniques that at least I like to use. Then the question was, in the E-minis that I shown earlier on, the actual fact was that corn started to pull back very sharply. Why did I not mention that the dreaded H, this lowercase h pattern, or the arch formation, is the predominant pattern? I didn't mention it only because I was just looking at this little one right here. But the arch formation is absolutely, the scallop formation is the one that's predominating. So the challenge now is for the E-minis to hold the 1333 low that was just made recently in this bar, in the 120-minute chart, to climb all the way to the 1340 resistance at the 200-period exponential moving average, and by 3 o'clock this afternoon, suddenly find a burst of strength that takes it right into the high of 1342.50 and higher to make leg B up. If it makes leg B up, we'll see overnight if that strength can be maintained. We've got to avoid it. Has to avoid getting to the 1320s under any condition, because if it does that, that's going to be very negative. So, thought I'd go through that. Now, the T-bonds is really what... Oh, I meant to get rid of that because now it doesn't apply anymore. All right, if you're looking at the charts that I'm showing right now on Tiger TV, remember these are archived. I believe it's Tiger, it's on, Tiger Channel 11. So the M pattern, the H pattern that goes to an M pattern in the TLT, it formulated exactly the way we discussed, but it did not retest the 124.09 level. On the last pullback on the 29th, it went to 124.63. That was really important. Why? Because it maintained peak A, B, the integrity that said if B was taken out, that will start leg C up. Leg C is going to be critical because the higher it goes, the greater the chances are that the TLT, the Lehman 20-year T-bond fund, will attempt to get to the 130.38 high of the 1st of June. Then what I talk about is the rectangle formation. That to me is very important. Remember Walmart? We were talking about Walmart. Within the rectangle formation, I like to, once I identify it, plap, I put this rectangle on and I stretch it out. Once that is in place, it says within a shorter time frame, I'm looking at the weekly now, I can go to the daily, and the daily should go peak A, B, C, and even give me a D at, just under, or just above the previous left side high. At that point, there's a whole new set of criteria. Why? Because chart patterns repeat over and over again. All it's doing really is it's forming upside down dreaded H. So all the rules that apply to the dreaded H become like an inverted Y, a soft Y, not a V shape, but a soft U-shaped pattern. So that's going to be very important. If bonds break above 130.45, 130.55 and close there, suddenly the monthly chart is getting even stronger. Run out of time. Stay tuned for Larry Pesavento. I'm sure it's going to be just a great show with him, and great shows all the way through to Tom's wrap up at 4 o'clock till 6. I'll be back on Friday for my show, and my service is the opening call, and please check it out.